Good afternoon. Ira Epstein of Linn Associates with your financial market wrap-up. And this wrap-up is for May 7th, Thursday, 2020. We know what the elephant in the room is, and I'll talk about it in a minute. Strong market in stocks, metals breaking out to the upside, big turnaround on interest rates. I mean, if you were to say, is anything making sense? Everything's fighting each other in different ways, and the market is getting ready for tomorrow's all-important what report? The all-important report is going to be that employment number. It's important because we're already expecting a 16% number there. What's important is, has the market rallied up? Buy the rumor, sell the fact? Is the market rallying up for an event that shocks it? I don't know. But it's almost like a Fed meeting. And one of the things I said yesterday, and I'll stick with it, I don't think you go through these big-time reports. I think you come in after the crowd. Now, another event that happened today, Paul Tudor Jones started buying Bitcoin and made it very public. Market was up $650 on it. Gold to the upside, silver to the upside. If you go out a year in the Fed fund futures, they're starting to project we're going negative interest rates. Which part of this is working? Okay, is the Fed really going to take the market to negative interest rates? The market seems to think so. But remember, fighting the Fed is never a smart move, ever a smart move. And this market has been going with the Fed. The question is the Fed going to let the market pull back a bit? Don't know. Let's take a look and get a feel. When we take a look at where we're at, number one, the market has come up nicely. You're still nowhere near the highs on the S&P. The Nasdaq is a different world. The COVID-19 made tech stocks catch on fire. It changed our whole standard in America. We live at home, we watch streaming TV, Peloton's work, we do everything with different applications now, very different than the way we worked. When people get back to the office, will some of that drop off? That becomes the question. What happens to Ubers, Lyfts? Do you want to do ride sharing? Big questions. There's a lot to deal with. But this market has come up and come up nicely. Now, when we take a look at the chart on a daily chart, these are still the April highs. You have not gone for them. You're still stuck in this 50 to 62% retracement on the Fibonacci number. Let's go to the next chart. The pattern is higher lows, higher highs with today's action. Today is an important day. Why? You had an outside day to the upside. My theory, and it doesn't mean I'm right, but I've gone back and done a lot of research in charting over my 5 decades. If you take out the low of an outside day up within the next day or day after that, in other words, 2 trading sessions, this is called then a bull trap, and the market often reverts back to the nearest of a major moving average or the slow stochastic. Go on your charts and take a look. Yes, you can get it break down and they get another key reversal back up. That's the exception. More times than that, go back. Charting is not perfect. Charting is an art. Charting is looking at what happened in the past over and over on patterns. So go take a look at that. Where's the market right now? The battleground this week, with all the crazy volatility, has been that line in the sand, the 18-day average of closes. If you take my charting course, I teach that it's from that number that markets like to decide what to do. But with today's action, and prior to today, that's not the pattern you had. Prior to today, you had a lower high, you had higher lows. So the market today had that outside day up, which gives the bulls going home the edge. You've got bias up, you've got trend, higher lows, higher highs, which all falls apart. If today's low is taken out, that's at least my first view on it. When I look at the next part, what could it drop to? 27.35. What could it rally to if it just keeps going? 29.34, let's call it. Could it go beyond that? Of course it could. But you normally stay within these bands, as you can see, 95% of the time. It's from the narrowness when you come in and start going sideways on a Bollinger Band that you have to look and think of it as a pipe, which isn't the clearest one here. You just began the narrowing in. You see that very different if you go to the bonds and the notes, and I'll show that to you in a minute. But upward trend going into a major report where the algorithms are going to take over, and I'll leave you on your own. I know what to do, and I hide when that happens. When we take a look at the momentum, it had been pointing down. I think you'd agree with me right here. This is what you looked like at the close yesterday. This is where you're at as you and I are talking. So it's flattened out against this, caught in those bands right there. Going home, bulls have the edge. In the Nasdaq, the last rally high we had on futures was 91.4475. The cash on the Nasdaq, and I realize I watch financial TV like you do, it's gone through it, not on the futures. It could. Where did the market stop today? Look at the Bollinger Band. I mean, what more can I say? That doesn't mean it has to collapse, but you've hit that target, you're overbought, you're back into it, and each time you hit it in the past, you started backing off. I'll let the other people trade this tomorrow. In the Dow, same thing as the S&P. Now you're getting real narrow bands here. You can break out to the upside. If it does, I'll be with the market, going with it. If it breaks out to the downside, I want to go with the market. I don't like it right here. I think that's where you get annihilated as the market churns you back and forth. And mentally, it's grueling because you're going, it didn't do this. I was too soon. I was too late. How many times have you said that? I'm right with you. I know that. Another outside day to the upside. So again, I'm looking at today's low. I don't care if the market first goes up, hits the upper band. If you take out that lower band, it is ugly. That's what I typically see. Now watch, tomorrow they'll take it out early and then rally, but it's still what I see. In the Russell, outside day up, right against the 18-day average. So it's a tale of two cities. It's a tale of a Nasdaq, which we know COVID has given the tech world a whole new meaning. This was a dream come true for tech companies. People are home, they have nothing else to do but go on their computers and do things. If it's TV, they're watching the Netflixes. If they have to buy, they're buying the Amazons. We know what's going on. And everything else is left behind because it's the old world. Am I saying it right? It's a way to think about it. As we come to the VIX, you have not yet gotten down to this 28.84, but I will say it again. If it's hit, I want to see if the pros did what they did here. Writing puts to get back to the 18-day average of closes. What about if the market rallies from here? Well, if it were to rally from here and take out 32.22, if we take a look at the market, let's see if I can get it to come in the way that I want. I hate when I play with these airwaves down here, and that's what it is. All right, so we are at 30.83, get up to here, and we come down to 30.52 today. So we've made a lower low. So even if you get up and run, you can't get an uptrend in the sense of higher lows, higher highs. The bears have control. You're very oversold. At the Bollinger Band, I normally say, shorts lift positions. I also think that the pros will write puts if the market gets there. In the T-bond market, this is what I'm calling this tube, this pipe. This is that melted bottle. Remember, we were just talking as this was developing a week and a half, 2 weeks, and I've been mentioning it all the way through. I said, you can't trade this. I said, the reason you can't trade it, trying for what you want, is it gets up, you think it's breaking out, it doesn't. You think it's breaking out to the downside, it whips right back on you. That is what this pattern often does. But from that pattern is where the trends come. So the key is to try to catch the market on the breakouts and understand it may be a false breakout once or twice, but that's what traders are going to try to do. Some people even will take it and buy a call and buy a put. They're not trying to do the strangle where they want to keep it in there and collect the premium. They're waiting for the breakout on either side. There's many ways you can do it. Talk to your broker to play those ideas. But as I'm looking at the market, it's doing just what we talked about. I mean, exactly what we've talked about. In the dollar index, you've got the same pattern. You got this width here, then you narrow it in, you go down, you go up, there's just no follow through. This is very indicative of markets looking for whatever the next trends are going to be. In the euro currency, you went down for a new low on the current move, and you had a reversal of sorts. Not a trend reversal, but you're not trending. You have a vertical price decline, but you have higher lows, or did you? Now you got a lower low, but you got a higher high. You know what I'd say to you? If you hit that lower band, just like you did here, look for the bounce away from it. The band's wider. When you get to the narrow bands, what can happen is once you break out, they can go because they don't have to pull back. The art is trying to catch that type of trade. When we come to the Japanese yen, you're at the upper Bollinger Band, which is a lot of resistance. Now, let's put on our genius caps. If the market gets a terrible number, people run for the hills. They want safe havens. They get scared. That's been part of the trade that I think the yen's done. It could be why we bounced back in the bonds today. Gold, what got that going? Could this be right in front of that employment number doing something? We haven't talked about inflation that's eventually going to have to happen and will happen as governments keep throwing more and more money at these economies. I just read that California is behind what they had projected for income just due to the COVID, breaking out $42 billion. How do you make that up? It doesn't get made up. How does Illinois make it up? You don't make it up. So is the government going to give them grants? Long-term loans are one thing. Grants? I don't know. But eventually this money has to do something, and that's why I think the gold lovers have been waiting in the woods, and it's also why I don't think if you look at that chart of gold just on a closing basis, it's so much cleaner than the daily swings. When we come over to Bitcoin, just running, We've talked about this. It's got the embedded reading. It's over the 18-day average. It's running. This is a market that back at the beginning of the year was 4,500. And I have been religious almost in telling you they're going to do the halving on May 11. And once they do that, the same computer will only produce half the amount of a coin that it did before, and there's a finite number. That could be, again, why people like Paul Tudor Jones are saying, you know, it gets the play of all these different parts, and supply is going to be limited, and maybe there will be a need for it. Who knows? Right now, it's a speculator's market. Differential between Brent and WTI crude. I was going to put Brent up there, and then I started seeing how long it would be, and I'd rather just say it. But the market is staying over the 18-week moving average of closes in red. 18-day. This is in a weekly chart. That gives it a bias to which market? To the Brent. So that's where this market is staying. We're going to see tomorrow, by the way, in the oil. Remember, we're going to get the Baker Hughes report. It comes out around 12 o'clock p.m. Central Time, so you'll want to see what that is. The trend is up in the Brent. You've got higher lows, higher highs. If you go back out 2 years in crude oil on the futures, you have any idea where the markets are? About $35 to $37. So these markets are looking down the road. They give you an idea what traders think the values might be. At $35, U.S. shale can come back on. Yeah. So, interesting. Higher lows, higher highs, support 27.47. You'd have to take out 25.48 to break the uptrend. Now, the upside's getting capped. Why? Because the slope of the Bollinger Band is falling and it hasn't hit it. So that's what I think is going there. And the same is going on in WTI. The market pulling back here. I look for the support there. The 2084 is going to be the important number, not yet overbought. Gasoline, this is what you call marrying and locked in on that upper Bollinger Band. And I try to catch it when I can for you, and I pointed it out. Now I think you have the embedded reading with it. So you've got both numbers over 80, both over 80, and both over 80. So you've got the embedded reading. Until the red line closes under 80, I expect as the market breaks away on those declines, traders are going to be buying this market. This is a cheap price. And as more cars hit the road, and they are going to hit the road, there's 31 states that have now opened up in some manner. And there's going to be more auto traffic. There's more need for the fuel. We are in spring. You wouldn't know in Chicago, by the way. We're going to be 30 degrees tomorrow. Hard to believe. Okay, nat gas. You went from this upper Bollinger Band right into the support. And we were talking this yesterday. This is yesterday's action. We were saying, okay, if the market breaks, it's got two levels of support right under it. The 100-day average in the green, 18-day average right there. The trend is up in this market. Here's where the market pulled in. Momentum is in a correction, pointing down, bias down, trend up. Now we see when the market wants to give us whatever the next signal is going to be. But it's pulled back into that line in the sand area to try to tell us, okay, let's see what happens. You know, one of the things that I do with my research, I write 2 reports a day. I don't know if you realize that. I write one Sunday night for the traders, and then Monday through Friday, and through Friday morning, I write another report. So there's 2 a day typically. And I give you the recaps of what I think the economic data that's coming out might be, bring you up to date with what those are, my take on when they come out, what they are, the highlights of what I'm seeing in the markets, and I do it in such a way that you can read it in just a couple of minutes, not 5, a couple of minutes. Then the trade recommendations that I like and list there as well. If you haven't tried it, we do offer a free trial. And as you get to the subscription, I'm now going to be talking to my staff. I'm probably going to start rolling into these subscriptions the idea that we can throw in more of the SPDR ETF into this as well. But we'll talk about that another time. I'm not there yet. So how do you get to this? Well, all you need to do is give me a call at 866-973-2077. My staff will work with you. Or go to our website under free offerings. You'll see it there. Click that. You can also click right here. If you're watching up here on YouTube, it'll take you to where you have to be. I'm Ira Epstein. I promise you I'm going to be glued to my TV with those unemployment numbers and looking to see the reactions. You have a good day. Talk to you tomorrow.